We're back. Retail stocks getting a boost today with the broader market. Joining me now, Post 9, is JPMorgan's Matthew Boss with his top pick in the retail space as we head into the holiday season. It's good to see you. Welcome back.
Great to be back.
All right, let's go through the list here. I want to start with the dud, if you will, Nike. We've talked many, many times.
Yep.
I know that there's a reboot going on here. What do you attribute to the stock action? The price action in that stock today was rather interesting, right? Wasn't it up and then it was down? Why?
Yeah, so 2Q results were in line with expectations. That created immediately on the print a relief rally post-close. Then as the call progressed, you heard the storyline of that this is going to take longer and that the divot is going to be deeper. So the actions are just beginning in terms of clearing the inventory, which is heavy right now in both North America and Europe, as well as some of the actions to get back to a pull market. So it's going to be 3Q of next year, basically one full year before Nike is prepared to actually be able to have inventory in the market with the inventory clean. And then from there, you need to scale the storytelling and the digital around the marketing, and that's going to create earnings that, on our numbers, are now 50% below the street for next year.
What do you think the main issue is? Like, what has prevented this brand from resonating with people now the way that some of these upstarts are doing? I heard another analyst suggest, could you name a current Nike commercial, big marketing campaign? I'm thinking about, some of the biggest athletes on earth over the years who were all Nike athletes, but now who have either retired and then, moved on to other brands. Like Steph Curry is still the thing in the NBA, but he's not a Nike guy.
No, he's an Under Armour guy.
LeBron's in the, November of his career in the NBA. Serena doesn't play anymore. Tiger is in the December of his career. Is that a problem?
I actually think it's larger. I think there's two structural changes that have happened. The first is, if you think about historically, Nike was a marketing company, and then it was innovation-led, as they have the ability with size and scale to spend more than anybody else out there. What changed is two things: e-commerce and the advent and more of the growth from global brands coming online. It lowered the barriers to entry. So you don't have to be the largest. It's not necessarily that you can catch Jordan and you have a halo effect. It's now the social influencers. And then secondarily, as you think about the barriers to entry coming down, I would say in 20 years covering this space, I've never had a time when you hear about New Balance with a turnaround, Hoka, On, you have Arc'teryx, Salomon in the outdoor space. Just the sheer number of competitors. It's not just Adidas relative to Nike like it was in 2014. That's why I think this is going to be longer, and this is going to take more effort to get back on stable footing. Do I think they can get back to growing an industry? Absolutely. But I think it's more 2 to 3 years out, not 1 to 2. And that, I think, is what the market was potentially wrong on.
Well, growing an industry is one thing. Growing above to justify a higher multiple where the stock used to be.
That's right.
That's the problem.
That's precisely it. So on my numbers, stock's trading at nearly 40 times earnings. And that is anticipating 400 to 500 basis points of margin recapture. And to your point, getting back to the Nike growth profile that was of old. That was where it traded 27 to 30 times. And obviously the market is anticipating a turnaround dynamic playing out under new leadership. And look, I think culturally, I think some of the people that they brought in every change that Elliott laid out last night, I do think are the right changes to make here. It's just that it does not happen overnight, and he was pretty clear about that.
When you talk about barriers to entry being easier, you're describing a situation where the goalposts have moved.
Absolutely.
But once they move, they don't move back?
No. And the other thing that changed is if you think about the percentage of what they call lifestyle. I think of lifestyle, it brings in a fashion element. That creates more volatility. And to your point, back to multiple, that's a different profile. Nearly 50% of the business is now lifestyle. They talk about more people wear a basketball shoe with jeans than wear it on the court today. That's a material change from Nike of old that was much more performance-led and could catch the best athletes because they were the largest and the biggest. And it's not necessarily the same today.
Yours truly, by the way, no foot shots. So who's getting it right? Who's getting it most right?
Yeah, so I think you want global brands that have structurally stuck to their correct dynamics around marketing and flywheel investing. So I would put Tapestry, which is led by the Coach brand, in that camp. I think Birkenstock, where the demand for the product is materially higher than the supply. I would put Ralph Lauren in this camp. That's a multi-year. It took them 5 years in terms of some of the structural actions to pull the product back out of the wrong channels of distribution and back into the correct and go forward. And you and I have talked about this one, but I think Lulu is much more performance-led in terms of relative to some of this lifestyle product. And that's why I think they went through this dynamic where they didn't have the newness, but now they're coming back on the other side of it.
Oh, so they made the turn.
Absolutely.
You think Lulu's made the turn.
You've stabilized, and now in the front half of 25, that's where the newness and the sizing and getting the growth back in North America. But you never lost the growth in international. You never had the excess inventory, and so you've never had to go through these clearance dynamics.
You still love Ralph?
I think Ralph is compounding from here. So you have a mid-teens margin structure that's moving higher on continued average unit retail expansion. And what I really like is the white space opportunity that's been opened up because luxury prices are now 50% higher off of a much larger base. So I think Ralph fits into the affordable luxury, and they've upscaled their customer.
What's the holiday going to look like?
I think holiday's good. So I think it started out strong. You had the break of the colder weather in November. Then you had the value catalyst with Black Friday. But I think the bigger overlying dynamic here is now that you have a wealth effect. I mean, the numbers are nearly $60 trillion of wealth creation since 2019. So I think high-income consumer, the dollars are there. I think the discretionary dollars are there. The catalyst to spend is there. Low income is where we're more, I would say we're more tepid into next year because you still have the wild cards of what's going to happen with tariffs, how's that going to affect pricing, and inflation remains the biggest headwind to that lower income consumer.
Shorter spending time period have any impact, right? Thanksgiving was so late.
The funny thing is, I actually think all it did is it compressed the lull. So I think people came out for Black Friday. I think that weather coming off of the September and October was the warmest September and October in 30 years. Apparel and footwear did well in November. That's when you do your full price selling. Next thing you know, the calendar turned and it was 2 to 3 weeks until Christmas. And now you have people in the last minute frenzy. And so I think especially for destination type of shops, as I mentioned, a Ralph, a Tapestry on the Coach side, or a Lululemon.
Abercrombie.
And Abercrombie. We were actually just in Columbus yesterday. Look, that's a mispriced security. That is a global brand that's being treated like a specialty retailer, mid-teens margin structure, moving higher, and growing double-digit top line for 4 years straight now.
Well, enjoyed the conversation. It's good to catch up with you again, Matt. Thanks.
Great to be back.
All right, it's Matthew Boss right here at Post 9.